The Wall Street utility that oversees $114 trillion in assets just made a decision. And almost nobody watching the price of XRP right now has actually processed what that decision means. DTCC didn't pick XRP, DTCC picked Stellar, not as one of several options, as the first public blockchain, the largest security settlement infrastructure in the United States has ever connected its tokenized platform to. Sit with that for a second, because everything else in this video builds off that single fact. Let's talk about what's actually happening with XRP right now, because you need the honest picture before we get to why. Something bigger is unfolding somewhere else. XRP is trading right around $1.06 to 10 cents as of the time of recording. That's down roughly 40% since the start of the year. The spot ETFs are technically live. 7 of them now, combined assets under management sitting around $1 billion. But the flow into those funds has gone almost completely quiet. So 10 of 17 trading days in July registered 0 net flow, 0 total net demand across that entire month, landed at roughly $27 million against a fund complex holding close to $1 billion. That is not the picture of overwhelming institutional conviction. That's the picture of a market that got its approval, celebrated for a week, and then went quiet, waiting for the next catalyst that hasn't shown up yet. And here's the part that makes this even more uncomfortable. If you're only watching the price, every single month, up to 1 billion XRP can be released from escrow. And while Ripple typically sends most of that back into new escrow contracts, a meaningful chunk still enters circulating supply on a predictable, recurring schedule. That's dilution happening on autopilot every single month, regardless of what the ETF desks are doing. So you've got thin ETF demand on one side of the ledger and structural supply increases on the other side. And the price is caught in the middle of that tug of war, sitting near its year-to-date low as of this recording. Look at the exchange flow data too, because it tells a more complicated story than the ETF headlines alone. Coins have continued leaving exchanges throughout this period, which on its own usually reads as bullish. Fewer tokens sitting on exchanges available to sell typically signals accumulation, but the pace of that outflow has been shrinking fast. Net exchange position change dropped by roughly 2/3 over just a few weeks in July, meaning the accumulation signal that would normally offset weak ETF demand is itself losing strength at the same time. When two separate signals that usually support each other both start weakening in the same direction. That's not noise. That's a market genuinely searching for its next catalyst rather than confidently pricing one in. To be fair to XRP, there is a real technical catalyst on the calendar. The next major ledger upgrade is expected to launch within days of this recording, and Ripple X leadership has been explicit that the intent behind it is to finally put tokenized assets to practical use on the network. That's a legitimate, meaningful development, and it deserves to be acknowledged rather than dismissed. But an upgrade that enables future tokenization activity is a promise about what might happen next, not a confirmed settlement relationship that's already running for years and just became public. That distinction between potential and already in motion is exactly the gap this video is built around. Now let's talk about what's actually happening on the other side of this comparison, because this is where the news becomes impossible to ignore. At the end of May this year, DTCC, the Depository Trust and Clearing Corporation, the entity that clears and settles the overwhelming majority of securities transactions in the United States, announced it is connecting its upcoming tokenized security settlement platform to Stellar, not evaluating it, not piloting it in a sandbox with no real assets attached, connecting it as the first public blockchain in this specific initiative with a go-live target in the first half of 2027. Stellar Development Foundation CEO Danelle Dixon didn't describe this as a new relationship. She described it as the culmination of work going back almost a decade, rooted in SE currency. The institutional tokenization platform, DTCC, acquired back in 2023 and folded into what's now called DTCC Digital Assets. That team had already spent years working directly with Stellar's developers, embedding the exact compliance tools regulated financial institutions require before they'll touch a public blockchain with real money. Clawback functionality, transfer restrictions, identity controls built directly into the base protocol, instead of bolted on as an afterthought. Think about what that actually means from a risk perspective. DTCC doesn't experiment. This is an organization built entirely around minimizing settlement risk for the U.S. financial system. When an institution like that spends the better part of a decade quietly working with a specific networks engineering team before making a public commitment, that's not a marketing partnership. That's due diligence so thorough, it took years, conducted by people whose entire job is to eliminate exactly the kind of risk that makes headlines when it goes wrong. And at the end of that process, out of every public blockchain that exists, they chose Stellar to be first. Consider what those specific compliance features actually solve for, because it's easy to gloss over clawback functionality and transfer restrictions as technical jargon when they're actually the entire reason regulated institutions have been hesitant to touch public blockchains in the first place. A traditional security settlement system needs the ability to reverse an erroneous transfer, freeze an asset subject to a legal order, and verify the identity of every counterparty in a transaction chain. Most public blockchains were never built with those capabilities native to the protocol, which is exactly why so many institutional pilots over the years have stalled out at the proof of concept stage and never converted into anything real. Stellar built those exact capabilities directly into its base layer, in direct collaboration with the team that DTCC would eventually acquire. That's not a coincidence. That's nearly 10 years of purpose-built engineering finally intersecting with the institution that needed exactly that solution. That single piece of news would already be enough to justify the title of this video. But it's not happening in isolation. And that's the part almost nobody is threading together into one story. So at the end of May this year, MoneyGram launched its own stablecoin, MGUSD, built to serve as core infrastructure across a network that reaches over 60 million customers and close to 500,000 retail locations worldwide. That launch didn't come out of nowhere. It builds on a 5-year partnership between MoneyGram and the Stellar Development Foundation that's been running quietly in the background the entire time. Stellar also expanded its work with the United Nations Development Program for on-chain aid distribution, a partnership that's reportedly cutting transaction costs on that aid. Aid from around 10% down to 2%, a real measurable improvement for one of the largest aid distribution networks on the planet. Not a headline with no follow-through behind it. Think about the actual mechanics of what that MoneyGram relationship represents, because it's easy to skim past a stablecoin launch without appreciating what it took to get there. MoneyGram is not a crypto-native company chasing a trend. It's a legacy remittance business with decades of regulatory relationships, compliance obligations, and operational infrastructure spanning nearly every country on Earth. A company with that profile doesn't build a stablecoin on top of a network casually, and it certainly doesn't do it after only a brief evaluation period. 5 years of partnership history means MoneyGram had ample opportunity to walk away, pivot to a competing chain, or simply not follow through. And instead, the relationship deepened into an actual product launch. That's the kind of slow-building institutional conviction that rarely shows up as a single dramatic headline, which is exactly why it gets so little attention compared to something like an ETF approval that happens on a specific announced date with a press conference attached. The UNDP relationship deserves the same level of scrutiny, because cutting aid distribution costs from 10% down to 2% isn't a marketing statistic. It's a direct, measurable improvement in how much of every aid dollar actually reaches the people. It's intended for instead of being consumed by transaction costs alone. When you're talking about international aid distribution at scale, that difference translates into real resources reaching real people who previously lost a meaningful share of assistance to transaction costs alone. That's not a speculative use case dependent on future adoption. That's an already operational improvement happening right now on Stellar's existing rails. And then there's OpenUSD. Stellar joined a stablecoin consortium alongside Visa and Coinbase with backing that also touches MasterCard, built specifically to be low cost, high throughput, and broadly accessible for exactly the kind of large scale payment volume traditional card networks already handle every single day. Layer on top of that, Tradible's commitment to bring up to $1 billion of private credit assets onto Stellar's rails. And what you're looking at isn't one good headline, it's 5 or 6 of them landing in close succession, each one independently significant, each one involving a different category of institution, Wall Street clearing utility, a global remittance company, the United Nations, 2 of them of the largest payment networks on earth, and a private credit platform moving real balance sheet assets on chain. Here's the thing, nobody covering this space wants to say plainly, because it complicates the simpler story everyone prefers. To tell XRP's institutional story right now is almost entirely an ETF story. 7 funds, $1 billion in combined assets, a regulatory pathway that took years to secure and is genuinely significant on its own terms. But an ETF is a financial wrapper. It's a way for capital to get exposure to an asset through a regulated product. It doesn't by itself tell you anything about whether the underlying network is being adopted for the actual use case it was built for. Stellar's current run of news isn't a wrapper story, it's an infrastructure story. A Wall Street settlement utility connecting its platform directly to the base layer. A remittance giant building a stable coin on top of the network's actual rails. An aid organization cutting real costs by routing real value through it. Those are 2 fundamentally different categories of institutional engagement, and conflating them is exactly how you end up missing which one is actually accelerating. Push on that distinction a little further because it explains something important about why XRP's price and Stellar's news cycle are telling 2 different stories right now. An ETF wrapper's entire value proposition is convenience for capital allocators who want exposure without touching the underlying asset directly. That's a legitimate, useful thing to build, and it genuinely does bring new capital into a market that wouldn't otherwise have easy access. But the wrapper itself doesn't require the underlying network to process a single additional real-world transaction. You can have booming ETF inflows sitting entirely disconnected from actual network usage because the fund is simply holding the asset in custody, not routing payment volume or settling securities through it. That's precisely why ETF flow and network utility can diverge, and arguably why XRP is currently experiencing exactly that divergence. Inflows exist, usage of the underlying rails for the specific purpose DTCC style institutions care about hasn't yet caught up to the same degree. Infrastructure relationships work in the opposite direction. When MoneyGram builds a stablecoin on Stellar's rails, that stablecoin has to actually move through the network to fulfill its purpose. Remittance customers sending money need that value to settle on-chain every single time a transaction happens. When DTCC connects its tokenized securities platform to Stellar, that connection only has value if actual securities eventually settle through it. These relationships are structurally tied to usage in a way that an ETF simply isn't, which means the news itself is a leading indicator of future transaction volume in a way that a fund inflow number can never quite replicate. That's not a knock on ETFs as products. It's just an honest accounting of what each type of institutional relationship actually measures. Let's be precise about the RWA context here too. because the numbers matter. The tokenized real-world asset market has surpassed roughly $43 billion in value over the past several months, and Stellar currently hosts somewhere around 5.4% of that tokenized value, putting it in the same conversation as Ethereum, BNB Chain, ZK Sync, and yes, the XRP Ledger itself. That's not Stellar claiming to be the biggest player in tokenization. It's Stellar being a genuine, verifiable participant in the fastest growing narrative in this entire industry at the exact moment DTCC chose it as the first public blockchain for a settlement platform that will eventually need to interact with exactly this category of asset. Notice something about where XRP actually sits inside that same RWA conversation, because it's worth being fair about it, rather than pretending XRP Ledger has zero presence there at all. XRP Ledger is genuinely part of that tokenization landscape too, sitting alongside Stellar in the same rough tier of participation. The difference isn't that XRP has zero presence in real-world asset tokenization. It's that the single largest, most consequential piece of news validating that category of use case in recent months landed that on Stellar's side of the ledger, not XRP's. If DTCC had instead announced its first public blockchain connection using the XRP ledger, this would be a very different video, and an honest one would say. So it didn't. That's simply the news as it happened, dated, verifiable, sitting there for anyone willing to actually read past the headline instead of just reacting to whichever chart moved this week. Now, does any of this mean Stellar is guaranteed to outperform XRP going forward? No. And it would be dishonest to tell you that, because markets don't move purely on fundamentals in the short term. And XRP still carries advantages Stellar doesn't: a longer track record of ETF approval, deeper existing liquidity, and a brand name that's arguably more recognized outside of crypto native circles than Stellar's. This isn't a video built around tearing down XRP. XRP's ETF infrastructure is real and it matters. But the specific claim in this video's title that something greater is unfolding in XLM right now holds up when you actually stack the news side by side instead of just watching which chart moved this week. It's also worth acknowledging the counter-argument directly, because a fair comparison has to. Someone could reasonably point out that Stellar's market capitalization remains a fraction of XRP's, that Stellar has had its own multi-year stretches of going nowhere, and that a settlement platform connection scheduled to go live in the first half of 2027 is still, by definition, a future event rather than a completed one. All of that is true, and none of it should be waved away. The honest version of this argument isn't that Stellar has already surpassed XRP in every measurable sense. It's that the direction and type of news currently landing on each asset points towards two very different trajectories. And the trajectory attached to Stellar right now is structurally more significant than the trajectory attached to XRP, even while XRP remains the larger asset today. Here's why. The DTCC news specifically deserves more weight than almost any single piece of news XRP has produced this year. ETF approvals, once granted, tend to be one-time regulatory events. The approval happens, the initial flow happens, and then the story becomes entirely about whether that flow sustains itself month over month, which, as we already covered, it currently isn't doing particularly well. A settlement infrastructure connection with an entity the size of DTCC works completely differently. It's not a one-time event. It's the beginning of an operational relationship that, if the first half of 2027 go-live target holds, opens the door to tokenized securities actually settling through Stellar's rails on an ongoing basis at a scale that a single ETF simply cannot replicate. Because ETFs move capital toward an asset, while settlement infrastructure moves the asset itself through a network as part of its core function. Consider the timeline difference too, because it changes how you should think about when each of these stories actually starts to matter for price. XRP's ETF story is already priced into the market in most respects. The funds exist, they're trading, and the current muted flows are the market's real-time verdict on how much additional demand that infrastructure is currently generating. Stellar's DTCC story, by contrast, hasn't started generating measurable transaction volume yet at all. The go-live target is still months away. That means the market hasn't had the opportunity to fully price in what happens if and when that connection goes live and actual tokenized securities begin settling through it. An already priced-in catalyst and a not yet priced-in catalyst are fundamentally different setups. Gaps and betting purely on which chart looks stronger this week completely ignores which one of these two stories still has room to be discovered by the broader market. There's a reason this kind of comparison rarely gets made out loud, and it's worth naming plainly. Content built around X is about to flip Y tends to get more engagement than content built around here's an honest read of two different institutional relationships developing on two different timelines. The first framing is simpler, more dramatic, and easier to clip into a short. The second framing is closer to what's actually happening in the data, even if it doesn't resolve into a clean, satisfying prediction. This video is deliberately built around the second framing because the audience watching this already understands both of these assets well enough to know that the simple version is usually the less accurate one. This is the distinction that gets lost in almost every comparison video covering these two assets. And it's the actual argument this video is based around. XRP's institutional story is currently measured in ETF dollars, and those dollars have gone quiet. Stellar's institutional story is currently measured in infrastructure connections, stablecoin launches, aid distribution savings, and a nearly 9-year-long relationship with the entity that clears the U.S. securities market to finally converting to a public, dated, real commitment. One of those stories is about capital flowing toward a wrapper. The other is about capital flowing through the actual rails. When you frame it that way, the title of this video stops sounding like hyperbole and starts sounding like the most conservative possible reading of the news that's already happened, verified, dated, sitting there for anyone willing to actually read past the headline instead of just reacting to whichever chart moved this week. So think about what a reasonable person tracking both of these assets should actually be watching for over the coming months, because that's more useful than any single prediction this video could make. For XRP, the thing to watch is whether ETF flows actually pick back up meaningfully, and whether the upcoming Ledger upgrade translates into real tokenization activity, rather than remaining a technical milestone with no volume behind it. For Stellar, the thing to watch is whether the DTCC connection actually stays on schedule for its first half of 2027 target, and whether any of these other institutional relationships, MoneyGram, the UNDP, OpenUSD, continue expanding rather than plateauing. Both of these are testable, dated, falsifiable things. Neither requires guessing a price target. They just require paying attention to whether the news that's already landed continues to build or quietly stalls out the way plenty of promising crypto partnerships have before. So here's the question I want you sitting with once this ends. If DTCC, an institution that oversees $114 trillion and spent nearly a decade quietly building towards this exact decision, chose Stellar first out of every public blockchain available to them, what does that tell you about which of these two assets the most conservative players in traditional finance are actually positioning around? And why do you think that story is getting a fraction of the attention XRP's ETF flows get every single week? This video is for educational and informational purposes only. Nothing here constitutes financial, legal, or investment advice. Always do your own research and consult qualified professionals before making any financial decisions. If this comparison actually changed how you're weighing these two assets, hit like on this one, it tells the algorithm to put honest, news-driven breakdowns like this in front of people who are tired of surface-level flip predictions with no real reporting behind them. Subscribe if you want the update the moment the DTCC connection actually goes live, because that first half of 2027 target is the single most important date on this entire comparison, and it deserves real coverage when it arrives. Share this with the person who's only tracking XRP's ETF flows and has no idea DTCC just made this call. They're missing half the picture. Drop a comment and tell me straight. Do you think XRP's ETF flows recover before Stellar's DTCC connection goes live? Or does the infrastructure story pull ahead first? I want real predictions, not just loyalty to whichever bag you're already holding. Two networks, two very different kinds of institutional news. Now you've got both sides of it. Have a great day. If you enjoyed this video, don't forget to like, subscribe to the channel, and be sure to join my free Telegram community with the link on my channel where I post my daily crypto experience and arbitrage opportunities you can't get anywhere else. This is XRP Hobart signing off.